Hey guys, what's going on? I'm going to hop into a quick video today talking about STRK and this covered call leveraged premium trade that I've been thinking about and I want to share with you. It's not something I'm doing, but it's something I'm super interested in. So I think it will be helpful to anyone who's an MSTR bear or just looking to generate stable principal high yield income in a form that's not MSTY or IMST. Let's hop into it. Here's your strike. We're talking strike today. I love strike these days. You've seen I've been buying more on margin. I call this a leverage income trade, and this isn't without risk. All of this is with high amounts of risk, so please don't go in here naively. Strikes trading at $107, dividends 8% annually, 2% quarter. Strikes trading at $107, dividends $8 annually, $2 quarterly. Next payout is June 30th. That's part of my entire thesis. I think people will start piling in, looking to harvest that dividend. Liquidation preference is $100. The effective dividend rate right now with the pricing is 7.5%. Levered MSTR volatility income exposure. That's what we're talking about. Now this is you have $1 million and you want to take risk and have a high amount of annualized income, but you want to preserve your principal and you don't want to experience downside volatility like MSTY, IMST. If MSTR goes down 30% this year, your IMST will likely be down the same amount, or your MSTY position, maybe not, but they've historically had about an 80% downside correlation. So that's something you don't want to experience. You want to preserve your principal and harvest yield. Now, using IBKR, you should be able to get about a 5% margin rate. On Fidelity, Strike is a marginable security, so you can do this sort of trade. Now, you use your $1 million and you buy $2 million of Strike. With the 5% margin rate, you're paying $50K a year just in interest expense. Now, that's deductible against the other income, so keep that in mind. You collect $150K a year in dividends with the 7.5% effective dividend rate on each $1 million of Strike. That nets to about $100K a year in just income. So this is a great setup. You have $100K a year of just income using margin, and you have all the MSTR exposure. How much MSTR exposure do you have? Well, if you do the math, and it's not exactly like this, but this is how I like to think about it. You get about $39 of MSTR exposure for each $107 of Strike that you own. So for your $2 million position in STRK, you get about $729,000 of MSTR price exposure. That's because Strike converts into 0.1 MSTR shares. Now, that's not the full story here. So we've gone over the scenario where you can make $100K a year in dividends. Obviously, you're levered up, so keep that in mind. But you're exposed to $729,000 of MSTR's price. What if you don't want to be long MSTR? Well, you can use the options chain. You can sell a covered call against a portion of your Strike that is MSTR exposure, so you're fully hedged, because you don't want to be selling naked calls. Those get you burned. All your calls need to be hedged. And with this hedge call, so you're selling a 2-month out at the money call, your premium is $40. So you'll receive $40, which is effectively a 10% dividend yield on your MSTR exposure, which comes out to about $72.9 thousand a month in premium. Annualized, this is $437,000 annualized if you're just selling at the money 2-month out calls on your MSTR upside exposure, and you collect $100K in qualified dividends as well. So that's an annual income of $537.4 thousand, or an expected annual return of 53.7% annualized. Now, what does that mean for you? Well, obviously, this is all a taxable event for U.S. investors, whatever, this, that, and the next thing. But why would you do this instead of getting an 80 or 90% annualized yield with MSTY or IMST? And now that's a real question. And the reason is because of this bond floor. So all of this works because Strike is mispriced, in my opinion. It's putting a 12% cash-on-cash yield separate from the actual MSTR exposure. And I believe it to be really behaving like this bond portion of this convertible bond pricing chart here. And what that allows is that principal preservation. If strategy or MSTR goes down, Strike's price will likely stay the same, because that dividend is really what's pricing the instrument. And if you believe strategy to be a creditworthy company, and you believe interest rates will stay the same or continue to decrease, or if you believe that the credit spread on strategy's fixed income instruments will tighten because the market will start pricing the over collateralization of these instruments, then you're making a bet on this bond floor, and which is something that you don't have with IMST or MSTY. Your principal is actually eroding because you're long synthetic positions, long calls, long puts that are covered, or long certain calls, short other calls. Whereas here you're long a perpetual bond-like instrument, and then you're short the time decay. So I really, really like this setup. I love this trade. I think if you don't want to be exposed to MSTR, or maybe you just need income, this is a great way to construct that sort of portfolio. Thanks for watching. Talk to you guys next time.